That's right. The Federal Reserve raised interest rates again. So there's not a lot you can do about that. There's not a lot anybody can do about that. Nobody has any control over the Federal Reserve. So right now you're probably wondering, is it a good time to buy a house? Is it a good time to sell a house? So there's not a lot you can do in terms of projecting forward, but we can go back in time and look at history. So the best time we can go back and look at is the 1970s, early 80s. And when we go back and look at that period of time, we can see that over that period of time, home prices basically tracked with the consumer price index, so inflation. We can also see that over that period of time, the S&P 500, so the 500 biggest companies, they basically tracked with the consumer price index over that period of time. So both of those two asset classes, which are the big ones that most of you probably own, basically kept up with inflation over that long haul of the 70s and early 80s. The difference is that real estate basically was a much less volatile asset class. It really didn't dip into the negatives, where with the S&P 500, you had a bunch of crazy up and down swings. So you combine that with your real estate portfolio. For most consumers, you are able to add leverage, which means you use borrowed money to purchase it, where for the majority of consumers, stocks and bonds are not purchased with borrowed money. You ended up getting a little bit better return with your real estate investment. So what that may mean for you, even though interest rates are higher, you may actually want to still borrow money to purchase your real estate rather than actually going out and selling stocks, bonds, to go ahead and make that purchase, because over time, assuming that you have a steady job, steady source of income that you're not worried about losing, you may actually do better over the next 10, 15 years by making use of somebody else's money to purchase your real estate and leaving your money in the stock market. Because if those two asset classes are still going to track equally, assuming that history rhymes rather than repeats, you may actually come out better off by using somebody else's money even at a higher interest rate. So if you want to talk about that, let's put together kind of a comprehensive plan. One, we have a bunch of really great wealth advisors, accountants, tax attorneys, CPAs that we work with that we're happy to put you together with. If you have somebody else that you already love, we're happy to work with them to put together a great plan for you. So give us a call here at NextHome Tomorrow Realty. I'm Craig Beebe. I'm one of the owners. We also have a bunch of other great real estate agents here. Happy to introduce you, or if you're a realtor at another state who likes to refer, we're always happy to take your referrals.